I'm excited to share with you the complete process when it comes to buying a piece of real estate, whether it be a new home or an existing home. It's going to simplify the process. It's going to ease your mind. And most importantly, I want you to know the biggest mistakes that people are making right now when they're purchasing homes and what you can do to avoid them. Now, my name's Wayne Turner. For nearly 30 years, I've bought, flipped, built, sold. I've helped thousands of people with their real estate transactions. I share that with you so you can have the confidence knowing that what you learn from me is actual tried and true boots on the ground experience. So let's jump in. The biggest mistake is not getting approved or knowing the difference between an approval and a qualification. You see, when you're approved for a loan, it's like having cash in your hand. When you're qualified, you simply just talk to a lender and they said, based on what you're telling me, you should be able to qualify for this much home on a monthly payment, this much payment each month for a home. Here's the difference. When you're approved, it's like cash in your hand. It's like cash in the bank. And if you're not approved, you can miss out on buying a home. And here's what happens. You make an offer to purchase a home. You don't have an approval letter. The seller, trust me, I've done this for 30 years. The seller's like, where's the approval letter, Wayne? Oh, we don't have one. Well, I'm going to sell it to the next person. Even though the contracts state that you can get an approval letter within 2 to 5 to 7 days, it's so much better if you have that approval letter. And listen, it doesn't cost you anything. Lenders, most good ones, will approve you for free because they want to loan you the money. You have to understand that. You're doing the banks a favor by letting them loan you money. That's how they make their money. They want you to get the loan and they'll approve you for free. However, if you're not approved, that seller can decline your offer or accept another offer. They'll do one of those two things. They'll say, nope, they don't have an approval letter, I'm not even counter offering, forget it. Or they'll look at another offer. You never know when there's going to be multiple offer situations. The housing market's been kind of slow for a while. So in 2024, home sales were the lowest they've been in literally 30 years, since 1995, which makes you wonder, well, wait a minute, is it a buyer's market or a seller's market? Well, here's what you have to understand. There are fewer homes on the market, which makes you want to think that it's a buyer's market. However, fewer people are buying homes. Now, it's important to know that there are homes just like this that I'm walking around that are brand new all around the country. This is a $260,000 home. There are homes like this in all states, everywhere around the country. What's really cool about this house is it is approved for all the different loan types. So you have FHA, you have VA, you have conventional. You also have USDA. You've heard me talk about that, United States Department of Agriculture. That means that you can buy homes just like this, and you see kids running, dogs barking. I just heard a fire truck rolling down the road. Yeah, we're pretty much in the heart of the city, but yet this home qualifies for a USDA loan. And yes, you only need $900 to buy a home like this. Now, USDA stands for the United States Department of Agriculture, and similar to FHA, the Federal Housing Administration, they're very similar in loan types. The difference is with FHA, you need 3.5% to put down on the property. With USDA, it's a 100% loan. The federal government guarantees the loan 100%. That means if the seller pays your closing costs, which typically run between 3 to 3.5% of your loan amount. So this is a $260,000 house, 3 to 3.5% will be your closing cost. This is a brand new home. The builder will gladly pay your closing costs for you so you can purchase a home like this, and it literally only costs you $900 out of pocket. You need money for the appraisal to make sure you don't overspend for the property and the bank doesn't overlend, and also the home inspection. But if you've got $900, a 620 higher credit score, and you've been on your job for 2 years or longer, and you can show with your debt to income ratio that you actually can afford this monthly payment, this is a great opportunity for you. However, there are big mistakes that people make when buying homes. But you must understand, real estate is hyper-local, depending on where you are. I'm in the Metro New Orleans area, and anywhere around Metro New Orleans, a $260,000 house, brand new home, is a good buy. And you're competing not only with other homeowners that want to purchase that home and live in that home, you're also competing with real estate investors who want to purchase that home to rent you that home. Now look, there's nothing wrong with renting, only that you're paying 100%. And I'm not trying to fear you or talk you into purchasing a house. You have to do you. But you also have to understand that the reason why people want to own homes, and there's a big, big benefit to purchasing your first home as a new home. The benefits are you don't have to worry about maintenance for about 10 years. No roof, central heat and air, water heater, cabinets, dishwasher, none of that. All that's going to work. Plus, for the first 2 years, you have builder warranties. But you have to understand, when you rent, You do pay 100%. It's no different than leasing a car. You have that transportation, you have that home, you have that shelter. However, you're never going to sell it. You're never going to gain equity. You're just going to give it back. So let's jump into the process. Now that you're approved, as I mentioned, it's like having cash in your hand. You want to give that to your agent. If you don't have an agent, we can help you find one. If you don't want an agent, that's quite all right. Do you make sure you're comfortable with the process. A good agent can negotiate their fee on your behalf. They can also negotiate your closing costs. But you have to understand this. Once you have that approval letter, you're good to go. It's like cash in hand, and you can simply make the offer to purchase a piece of property. Now, when you're making an offer on the property, you can't be ashamed or too shy, if you will, to make a good offer, to make a somewhat lower offer. You have to ask your agent, what is the market? Is it a buyer's market? Is it a seller's market? It really depends. In an area where I'm at right now, if you're over $650,000, there's quite a bit of inventory. You're looking at 5 to 6 months of homes on the market. That means if not another single person purchased a house, it would take 5 to 6 months for the buyers at their current purchasing time frame to absorb those homes. That's why it's important to ask your agent, is it a buyer's market? Is it a seller's market? What's the current inventory of homes? That way when a home hits the market, it's only been on the market 1 or 2 days, you think, wait a minute, this is a good one. I need to make a little bit higher than I would. You don't have to go over list price, but you don't have to go too much lower than what they have it listed for. Now, before you make the offer, you just have to know this. You have several things that you can negotiate. You can negotiate the time frame to close. Typically, that takes just about 25 to 30 days. You can also negotiate the time of possession, when you're going to actually take possession of the property. Most people want possession of their home that they just bought the day of. You also can negotiate not only the close date, but also the closing cost. You can also negotiate that inspection time frame. How much time do you have to inspect the property? And that is critical, because most of the time people want anywhere from 5 to 7 days. But you need to make sure that you have 10 to 14 days to do what I always call and tell people to do, and that's your due diligence. Now, your due diligence is that time frame of which you have to inspect the property, but you want to do more than just inspect. You have to know that this property, for example, it's a new home. There's a septic system. There's also a well. You also have to look at, what about the survey? It's a new home. Is there a survey? So you have to look at well, septic, survey. What about HVAC? This house is new, but if it's pre-existing, you may want to get the HVAC. A lot of homes have plumbing inspections. That means all the plumbing that's underneath, especially if it's a slab home. You just want to make sure you do all of that. And most importantly, always look at your homeowners association documents and make sure you can do what you want to do with that home, as well as looking at those deed restrictions, because that can make or break what you can and can't do in your own home. Now, once you do your home inspection, the home inspectors are going to give you a full page booklet of report. They're going to email that to you, and you can look through and see, okay, what's not working to its intended function. And by all means, make sure you get every home inspected, not just pre-existing homes. One of the biggest mistakes that people make is they automatically assume that a property's brand new, and since it's brand new, well, the builder's given a warranty and it must be up to par. Believe you me, I can tell you some horror stories of plumbing not hooked up, electricity wrong, roof leaks, all that stuff. So regardless of the home, new or pre-existing, always get it inspected. That's one of the biggest things people miss. But look, it doesn't just stop there. Once you have it inspected, you're going to simply give that report to your real estate agent, and they're going to share that with the listing agent or the contractor, whoever it may be. And you can ask them to fix everything that's not working, that's broken. Broken window, leaky faucet, leaky roof, exposed wires in the attic that need a junction box. All that petty stuff can be easily done and taken care of, and most sellers, 95% of the time, are glad to take care of that for you. Now, once they do the inspection's done, and you get that in writing, here's what I want fixed, here's what they will fix, then you're good to go. A good agent's also going to ask you if you want copies of receipts for those items, because having copies of those receipts for the items that they repair shows proof that they've been repaired, and it saves you a little bit of time and money, because you don't have to pay for the home inspector to go back out, unless of course you want to. Now, after it's inspected, within 10 to 12 days from the close date, the real estate appraiser is going to go back out, and the real estate appraiser is going to appraise the property. They're going to make sure that you're not overspending and the bank's not over lending on the property, and that's your appraisal report. I always tell people, make sure that you tell your lender, can I please have a copy of the appraisal? It's interesting how you pay for the appraisal, the lender orders it, they send it to the lender, and I can't tell you how many times that the buyers never get a copy of their appraisal. And look, the reason why you want that appraisal is that's the actual documentation that shows you all kind of information on your home. Square footage, bedrooms, baths, dimensions, all that stuff is in there. Oftentimes it even shows flood zones and all of the information that's pertinent to your property. And you'll want to have a copy of that so you can actually keep it in hard copy print or somewhere on a hard drive. So when you go to sell that home, you have proof of square footage, bedrooms, baths, and everything, not just a view of the house. So now you got approved, you got an agent, you wrote an offer, you got it accepted, you had it inspected, you negotiated those repairs, you're good to go, you had it appraised well, you had the utilities turned on, transferred in your name. Now you're going to get a contact from the closing attorney. They're going to call you and ask for your information just to verify everything. What you do not want to do is to send money, because unfortunately there's people out there that make up fictitious emails that look just like the title company, and they will say send us money. People have lost literally hundreds of thousands of dollars that way, never to be seen again. So make sure you don't send any money through any sort of a wire transfer. You can bring a certified funds cashier's check to closing. Now, how much money you're going to need at closing, you're already going to know that, because your lender is going to give you what they call a truth in lending statement. They're going to ask you questions like, how much money do you want to put down? How much money do you have in the bank? Do you want to go FHA, conventional, VA? With FHA, as mentioned, it's 3.5%. Conventional, you're going to need 5%. If you don't put 20% down straight across the board, you're going to have to pay PMI, with the exception of VA. When you get a VA loan, you don't have to pay private mortgage insurance. It's guaranteed by the government on the VA loans. But you're simply going to sign 70 to 80 pieces of paper at closing that basically say, if you don't pay, you don't stay. I hope that simplifies the process, makes it a little bit easier for you. At the end of the day, it should be an enjoyable experience. Buying a home can be really stressful. My goal is to take that stress, to simplify it, to make it easy, so you can have a fun, pleasurable experience buying your home. God bless.